Hey everyone, thanks for tuning in. This is Wes with Pikes Peak Trades, and I think a critical time in market timing, market structure, certainly with what's going on out there in current events, the geopolitical landscape, the domestic U.S. economy, the global world economy. I think a great time for me to give you guys a market update. Now, I'm not going to go through everything. I'm not going to give you a list of 20 or 25 tickers and charts, but I want to talk about the most important things that I'm seeing out there right now from really where I think you need to start. And when you do what I do, when you try to create a quantified model of how price moves in progression, up and down, even sideways sometimes, you've got to be looking at the biggest picture time frame charts. And that's where we're going to start. I'm going to have you look here with me at the S&P 500 quarterly chart, because if we're looking at quantifying the biggest market moves over time, and in this case, I'm wanting to give you some very specific things to look at in case we need to be looking at potentially very bad market outcomes, maybe for the rest of this decade. We've got to make sure that we start with the highest time frames. So I'm going to dig in here in detail to this quarterly chart, and a couple things that I want to point out. I'm not going to show you my entire Elliott wave progression all time of either the Dow or the S&P 500, but you're going to see enough detail here on this chart where you can put some things together. I want you to notice that I'm charting here the last really significant, prolonged and painful bear market that marked the end of the great financial crisis in 2009 as a super cycle for low. And then my progression moving up from that would be 5 primary waves into a cycle high that turned into what technicians call an expanded flat here at the COVID lows that ended the first quarter of the calendar year 2020. Now, from that, and this is where really things get important, is I think you can see pretty clearly on here only 3 waves up. So what I'm counting as a primary 1 wave up, and that takes us into the price high of early January 2022, into that pretty painful bull market that, at least in the S&P, lasted until October of 2022. If we're talking about growth stocks had topped even almost a year before that in the S&P, and we'll see ARK-K here in a little bit. I use ARK-K, the Cathie Wood ETF, as what I'm looking for in growth stocks, into that bottom, and then the recent top that we just had here in January of 2025. Now, because of that, a noticeable 1, 2, 3 waves up. What that means in Elliott wave and in market structure terms that I use to quantify the market, we cannot see price that sells off into that price high. And if I just bring that up on your screen, you're going to see that number right here, 48.1862. That is really marking price high structure and timing of what I would call the hard red lines, what would invalidate these bullish wave counts. Now, we're not necessarily guaranteed to go there, not saying that we are or that we will. We're using that as the price marker that will distinguish bullish from bearish probabilities. And that is ultimately what I do. That is my role in the market. Is I don't have a crystal ball to accurately predict. I don't even like that word. I offer market probabilities. And in my assessment, that really is the key number. And I'll take you through a few other key numbers in case you want to watch DIA, which is the proxy that I use for the Dow Jones, or if you want to watch IXIC, which is the ticker that I use for the Nasdaq Composite, or QQQ. I'll take you through those because I think if we start seeing those fall, that's when we have to entertain the really bearish outcomes. And if I just offered that quickly to you, that outcome that I would see would be a price correction since that great financial crisis low in 2009. Okay, so what I am currently projecting is that the pullback that we're seeing so far in the first quarter of 2025 is simply correcting price since the bear market low of 2022. Now, on the quarterly chart, a couple signals that tend to give us an idea that we might be seeing something worse would be a closing loss of the 8-quarter EMA. And I've gone back into that great financial crisis. What I've got is an expanded flat bear market here. When we started to see those losses, so we're looking here right at the dot-com bust in the fall of 2000, we started seeing quarterly candle losses. And that was a clue, a big clue, that big time bear market structure had kicked in. And it happened again here in that loss right in the first quarter of 2008 that then triggered just that massively painful price pullback really for the next 15 months. Now, this time period right here, when I was in my mid to late 20s, this is really when my interest began to be piqued in the stock market. And I had just put money into the market, just having started to make some money as a young adult. And when I experienced these sets of losses and this market pain, I wanted to know, how could I learn a system? I wasn't going to come up with it on my own, but how could I learn from others to create a market system where I could try to quantify and project risk and really protect that hard-earned capital that you want to have on your side, but you certainly want to have it sidelined in case we get difficult market conditions. And that's when I began to learn about Elliott Wave, which is my choice of quantifying market movement. And so I've explained to you there what I'm looking for. And so if we're going to start to see potentially a very bad cycle degree bear market, we would see the next quarterly price close, which would happen in June, below that 8-quarter EMA, which right now, here at the close of the first quarter, is standing at about 52.40. That's going to be a first warning sign. And then if we break 48.18 on the S&P, then I think I will make this my primary count. And you got to batten down the hatches. And we got to be then looking at potentially very painful market outcomes. Now, I want to show you some more, and I like to stick with consistent tickers as I show you time frames here, is I want you to notice that we did have negative RSI divergence that closed when we got through the price close here at the end of January. And so that does match what you see in bigger price pullbacks. And the other concerning thing from a technical standpoint is the monthly MACDs, and you'll see this on QQQ as well, they are starting to hook towards a bear cross. So if the rest of March, and we don't have much left, we've got Monday and Tuesday in trading, if it is nasty and it closes with that bear cross and then confirms in April, it's likely that we've got even more evidence on the bearish side of the ledger. And my primary forward projection, which I want you to notice from a fib pullback, which I use Fibonacci ratios all the time in my work, it has already reached a typical 0.236 fib of correcting price from that primary 2 low in October of 2022. So the monthly gives us just a little bit more information, and then we can drill down even a little bit more into the weekly. And here you can see fleshed out, if March lows fail, and we need to pull into the low 5,000s without breaking that key 48.18 price, we see what would be a classic ABC structure in the markets. And that certainly could happen. Again, we see April close with a confirmed MACD bear cross, and we see a June quarterly close below the 8-quarter EMA. on the S&P, and then my confidence that the low 5,000s will actually hold, they certainly start to drop. Okay, so I wanted you to see all that in the S&P 500, which I think is the best market gauge for just looking at health and structure market-wide. But I want to show you other things as well. So let's certainly look at the Qs here. So we get into the Qs, and here I'm entertaining for you that possibility that if we see a price break of 408.71, that is the price high here of what I'm calling a primary one move off of the COVID lows in 2020. If that breaks, we could be looking at price that moves all the way back to the bottom of this bull channel that started again at that key time period in the 2009 great financial crisis lows. That's going to be our marker as well. And we can see again here on the monthly that we're looking at a potential already in March, a MACD monthly bear cross. So certainly do we need to have a heightened level of caution? We absolutely do, because for what I've shown on the quarterly chart, monthly S&P MACD, here on the QQQ monthly chart, there is technical evidence that definitely needs to keep us cautious. Now, is it also possible that what we're seeing is just some typical cyclical bear market development in an otherwise healthy bull? Yes, and that is where my main thesis is going to lie until we start to see that domino cascade effect of worse results. So if I take you here into the QQQ Weekly, we did not undercut March lows yet on Friday, March 28th. Could we? Certainly. Does it seem more probable at this point? Probably. You'll see that same ABC down that I showed you on the S&P. But again, we confirm that monthly bear cross on the MACD in QQQ. It follows up with another weak April. And again, remember historically, seasonally, April is one of the more bullish months in the stock market. So if we see confirmation historically against a bullish month, that's going to add more evidence to the bearish side of the ledger. And then again, we're looking at if we lose 408 on the Qs, we could be moving all the way down. Now, I won't show you the implications of that on all individual stocks. If you want that, come join me. Join me on the web-based application, the market affiliate that I work with, Slice. Come join my Advantage service where I take you through in real time, moment by moment, hour by hour, day by day, week by week. I take you through all of these details and would love to have you join my group and have you journey on this together. Maybe it means that we've got to navigate a painful bear market. Maybe it doesn't. My primary work is gonna stay true for now, that we will bottom at some point here, either imminently or early in the second quarter of 2025, and then this bull channel will continue upwards, what I would have projecting through the majority of 2026. So again, it's about market possibility, probability, projection. It's not about certainty. You have to embrace the uncertainty in the markets, certainly if you're going to be able to be flexible and have a system that protects capital. Okay, now I will show you a little bit of individual name, and I know so many of you are interested in crypto, and so I will show you here what I think is a really key name, and that's going to be Apple. So Apple so far is holding better above potential March higher lows than other names. It as well has an alternate bear count. Apple is a little different in that for it to confirm much more bearish possibilities, it really is just going to have to break 2024 lows. So we would look for Apple's role in helping push price down on the S&P and the QQQ given its weighting, but really these wave counts are valid all the way down to that 2024 low. A name that we would look for, that I would look for much more quickly for invalidation is actually Microsoft. Let me show you that on the Microsoft Weekly. If we lose the same corresponding time frame high of the push into November of 2021 at 349.67, we certainly have to be aware of more bearish outcomes that we could potentially be correcting on Microsoft of the same time frame of the great financial crisis low. And so I think just those two names right there, given their weighting, just given their headline nature, two stocks that we really have to be looking out for. And in my advantage group, we get a lot more active than that. We talk about how would you actively trade if you were looking on the long side. Where would you be looking to protect if you needed to exit? Okay, now that's as far as I'm going to go in this video with main indices, ETFs. Well, you know, I mentioned the Nasdaq Composite, and let me just do that for you here. Let me slide this over just real quickly, because those of you that might follow that broader composite, you're going to want to know as well, what would invalidation look like? Again, same price high, same time period, and on the IXIC ticker that I use, if we lose 16,212 on IXIC, I think we're then needing to entertain something more bearish, which I don't have fleshed out on this chart, but you can then extrapolate from what I showed you on QQQ. Okay, now, I do want to show you Bitcoin, and just because Bitcoin really just does have a lot more attention, probably more attention than it's ever had, and I've got Bitcoin differently in a progression than the S&P and the Qs, which I think is logical. It's a cryptocurrency. It's not an institutionally held, at least yet, stock market index. So I have Bitcoin in a primary 2. That means that it again is correcting from the 2022 lows, and could it certainly go lower? In that case, it absolutely could. Under this count, though, you would not be using the 2021 price highs as invalidation. It could fall all the way down into the low to mid 50,000s and still maintain this bullish posture. I think there is a possibility that we do get our March lows to stick. There's kind of a classic potential inverse head and shoulder pattern with that sloping neckline. So I'm not completely ready to write Bitcoin and other cryptocurrencies off yet. I am aware of more intermediate term bearish possibility, but if you are actively involved in Bitcoin, and really this would go for what I would talk about in general with other individual stocks, is if March lows are lost, that's really where I think you've got to be looking more actively to protect capital. But for now, we have a higher low, and even on the small time frames, we've got an active higher low at work here against the March 10th low, which certainly, if you're active in your work, is going to very, very clearly define risk for you. Okay, so again, if you want details, and this weekend in my advantage group, is I gave about 35 to 40 different tickers of things I actively chart, individual names, multiple cryptocurrencies. I get into gold and silver and the miners in those sectors as well. And I would certainly, if you want to join on this market journey and just find for yourself, what does it look like to actively track and project these things hour by hour, day by day, week by week, come join. Come join my Advantage service. Come join my Slice Update service. And certainly, at least right now from this video, you've got really important markers to help you and for us to be looking at here, certainly through the end of this quarter in March, the end of April, the end of the second quarter of 2025 in June. And it's incredibly exciting Is it a little bit fearful? Yeah, I've given you evidence to suggest that there are reasons for us to be cautious, but I'm always on the lookout for opportunity, and I've given my Advantage and Slice group today a number of things to be looking for in case we do actually get a surprising bullish resolution, which definitely right now would certainly fly in the face, I think, of most prevailing sentiment and attitude that is out there. So I hope that this video finds you doing well. Stay steady, stay engaged, and look forward to any interactions that you might have with me, either through the YouTube posting here or on X/Twitter. And let's see what we get here finishing out March and then into what we would think would be a seasonally bullish month of April. Really, really key time frames here for us market-wide. So that's it for now. Thanks again for your viewing. And if you have any questions, fire them away.